Hello everyone and welcome to today's major markets update for Friday, September 30th, 2022. Blood on the street continues. So let's have a look if we are still on track, which I believe we are, and also have a look at some of the monthly charts because the month of September is in the books. So it pays to look at the bigger picture. Let's start off with the Dow Jones. This is the ABC count. We should now be in this green wave 5. Why? Because we broke below the, let's see here, Wednesday, that's Thursday, Wednesday, Tuesday's low. So that means wave 3 and 4 have been confirmed. So this is not an A, B, C anymore, but a 1, 2, 3, 4, 5 into this ideal target zone in the 27,000s, I believe it is. That should complete wave C3, and then we'll see if we get 4 and 5. I believe we do. So I still think we have lower to go. See, there is potential positive divergence forming on the RSI 5, meaning we're going lower on more strength, or in this case, less weakness, but we need to see a reversal first. So this is a condition, not a signal. Once we see the signal, which means pretty soon, in my humble opinion, given how oversold things are, then this wave 4 is going to be tracked. The 4-5 is my preferred view. Same here for the, let's see, expanding leading diagonal wave A. Here we go. I'll have to update this a little bit. There we go. Also here, same as of course the rest. I don't know why. This is of course going to be something like this. There, 5 is 1, should be 3, a question mark 4 or 5. We don't know it yet, but we anticipate it. We just don't know it yet if this is 3 or C. So far so good. Okay. Then once it's all complete, we know it with 100% certainty. And then we should start to look for this massive B wave bounce. Remember, B waves are extremely tricky. So we have, of course, an ideal ABC zigzag, but it can also become a irregular expanded flat or a triangle. To be determined, don't know. We're first and foremost tracking the impulse lower preferred path. And here is the Dow Jones chart on a monthly time frame with the monthly candles since 2014. What is most important here is that we overlapped, of course, with this wave 1 high. Okay, this entire rally was 1. So this means this was not a 3 and this is not a 4, because 4 and 1 cannot overlap in an impulse. Okay, so what does this mean? That this wave count here needs to be adjusted. So what I'm going to do is then move the labels. This is on monthly closing basis. Okay, so we'll have something like this going on, and this is 3 and this is 4, and then here we have finally our leading or ending diagonal wave 5, something like this. And then of course you can see here the A, the B, etc. That is fine. How we going to fill that one in? So this is probably A, this is then going to be B, and then here we have, I would say, probably another set of A, another B, as you know, something like this. Sorry, I'm gonna change that there, and then there, and then there. Alternatively, 1, 2, 3, 4, 5. Okay, so we've not bottomed in this target zone. We've taken it completely off the table, and then eventually we should see this wave A bottom somewhere here. Let's do a quick analysis there, something around there. Okay, so please have a look here where we should bottom, somewhere at around these levels, at around 26.5, 27,000. That kind of matches quite nicely here with the daily chart. Let's have a look here at the ideal Fibonacci extensions. I think they're still correct on stock charts, and this should then be there, adjusted a little bit, stock chart, you're a little bit off. This is then wave 3, picture perfect. That is then wave 4, picture perfect. And then we should, of course, see wave 5, assuming ideal extensions and all that good stuff into there. So we're going to raise it a little bit, and that one should go there. Excellent. And then the ideal target zone here is 26 to 26,800. Picture perfect. That matches really nicely with what we saw here. Okay, so then this is A, and then we will get a wave B. Let's see how much wave B should do. Ideally anywhere between 50 to 62% retrace. So sorry, I think I got muted. So this is wave A, and then this is wave B, and then this should be then, of course, wave C there. Okay, so this is then the bigger picture. Wave C all the way down there, something like that. It would not surprise me. That brings us back all the way to the 2020 lows, and that should then be cycle A. There we have it. So to reiterate, the ideal Fibonacci extensions target anywhere. Again, put it there on the map. Somewhere between, I would say, 27,000 and 26,000 there. And these ones are looking for anywhere between 27 to 25-ish, somewhere there, to close to about 28,460, okay, to 28,460. And then a move back up here to ideally 29,200. Remember, bear markets, upside disappointments, downside surprises, that's 1-0 too many. And then this one should go to about there, which is 29,940. 29,940. All right, so that is for the Dow Jones. So that is the ideal path for the Dow Jones. Alternatively, again, we simply have an ABC path. I have, of course, the same downside targets here. If you want, I'll put those in the chart as well. I really want to make sure we're reviewing this really nicely for the moment, so we get a very good idea of where we are in the bigger picture and what we can expect over the next few days, weeks, months, and years. And that is, of course, that we are most likely in a much larger bear market. Okay, I'm going to do the ideal wave 3 target zone here, there. So this should be 27 to 70 there. That's the low end. And the ideal upside target for the wave 3 is then 2880. Okay, there we go, 2880, somewhere around there. And then, of course, we get our ideal wave 4 to 29 to 70. 29 to 70, all right? And potentially it can go to the 76.4% at 29,915. We just rounded up nicely, 29,915. And then, of course, we get the wave 5 lower. And let's make sure we have ideal extensions going on here to there and there, okay? And this is not correct in time or price, in time, this is only correct in price, of course, assuming we see ideal targets, and this should then be 26,700, 15-ish, nice round numbers, 26,715, and potentially here as low as 26,050. Okay, so 26,050 there. Hopefully stock charts will save it. And it did. Wonderful. So we're looking here 26 to 27,000. And if we did this simple C is A relationship, as I showed you, right? So we have this very simple A, and then this should then of course be there. We get to 26,850. Beautiful. Of course, that's going to then be wave C. Let's make sure you get all the wave degrees correct. This looks very nice. And from there, we should see the massive, massive multi-month bounce for wave B. Don't know yet, but we'll assume an ideal 50 to 62% retrace. And then, of course, we'll get the wave C. How wave B is going to unfold, is it going to be a flat, a zigzag, or a triangle? Don't know. Looks like we have a lot of flats in here, but this is the preferred bigger picture path for now. Once wave cycle A completes, we can start maybe going to new all-time highs. I'm pretty sure things will get very scary once we get into the 20,000s on the Dow Jones. Here again is then the view on why this is not a wave 4 anymore, a major 4. This is because we overlapped, as I showed you there. All right. So let's move on to the NASDAQ 100. The NASDAQ 100 also made a lower low already. Wave 5 in green is confirmed. We should go to this target zone. Wave 4 and wave 5 preferred path. From there we get the bigger wave B, just as I showed you for the Dow Jones. So everything is tracking nicely for this potential C wave or a fifth wave. I think it's a C wave to be determined, doesn't matter. We'll get a bigger bounce soon. This is then the semiconductors, where I had to adjust the wave count from a impulse higher to a irregular expanded flat. Very tricky indeed. And we're impulsing nicely lower, 1, 2, 3, 4, 5. And then it looks like this wave 5 of 3 is subdividing. It should have bottomed here. It did so, but only as a 1 and a 2. So we're now nicely subdividing for green 5, green 4, of red 3, and then we should see red 4 and then red 5. Matches the other indexes as well, so I like it. We're nicely aligning the indexes. Let's move on to the S&P 500. Also here, we're moving towards the ideal wave 5 target zone based on Fibonacci extensions for the fifth wave in relation to the first wave and all of wave 3. You see the target zones right there, anywhere between 34.15 and 35.45. And then we'll get the bounce for this green wave 4 towards about 3,700 plus or minus 100. And then wave 5, with of course the bearish cutoff still there. I don't believe it so much, which would be the alternative count here that would turn into a larger flat. I don't see it right now happening. This is of course also the ABC count, similar to that on the Dow Jones and the NASDAQ 100. And then we should here bottom for this wave 5, as I said, 3,400 to 3,500 seems about right. And then 36, 37, and then ultimately 3,300 that remains on tap. And from there, we'll then see the bigger bounce. Again, this is not correct in time. This is only correct in price. I'm trying to work with the space available to make sure you still understand it and you can still read it, okay? I'm not a market timer. I do provide occasionally some of these seasonality charts to give you an idea of what to expect. And I still expect a low somewhere in October, November before the larger B wave starts. I still expect an end of year rally. Alternative count is decreasing in odds as the days pass because we're moving lower. And here also is then the S&P 500 where I was looking for a 3, a 4, and a 5. So this means the S&P 500 still has not reached that ideal wave 5 target zone. And that's why I think the B wave will do the trick. Then this little down month, this is a monthly chart, was wave 3 and 4, and then this was wave 5 for a very orthodox top. Okay, a very orthodox top. Normally this wave 5 should have gone all the way here. It didn't. So now we're gonna have a look here, and this is of course then, let's say this is 1, let's say this is 2, okay, for the expanding leading diagonal, and then this is 3. We're already below the bullish cutoff, 3,600, because we are now at 35.85. So this is off the charts, 3, and then this is 4, as you can see, and then we should have a nice relationship, I would say, for the fifth wave based on the length of all of wave 3. There we go. So we should get pretty close As you can see, here it says about 3100, and I have 32 to 3300. Okay, so we can always go a little bit lower. So this is then the ideal wave 5 target zone. Okay, 5 for this expanding leading diagonal. As you can see here, this is expanding leading diagonal. And alternatively, we simply have a larger A wave or a larger B wave. And then we simply do a nice C is A relationship, as you can see here, there. And this will then target again similarly. Okay, so nothing out of the ordinary. Let me write that in for on the charts for you. This is 3115, and this is 3575. Well, very close. 3575. Oh, 3575. There we go. And the intermediate is about 3400. Well, let's have a look at the daily charts, shall we? Okay. Just to reiterate the daily charts. The daily chart was looking here for a low at around 3200, 3300. Not too bad. Not too bad at all. Remember, this is the ideal wave 5 upside target. We have not reached it. So eventually, I believe this cycle A and B wave will do it many years down the road. IWM looks nice here for the 345. And then we should see another 345 complete or 4-5. Okay, I think we're getting closer to the bottom than certainly to the top, but for now, the trend remains lower. Let's have a look at the new lows. Well, as you can see here, the new lows are putting in a, I would say, divergent top. So we had, oh, we need this one. So we had this extreme high here, and we have this high here. So this has happened here as well. This was a little different, but here you can also see we have two tops. Same here, two tops, two tops, two tops. So what happened with the first top, lower prices. Second top is when we get closer to the bottom. So that fits the narrative with completion of this larger third wave of this C wave, potentially fifth wave. Okay, so it fits the narrative. We've seen this before. I'm really comparing apples to apples because this is comparing the current bear market internals. I don't want to compare it with bull market internals because we're really then talking about different environments. Let's have a look at the PMO buy all. Still on a sell, no buy signal. Of course, sentiment is extremely washed out. So all this starts to suggest we should soon see a bounce and lower prices. Negative divergences will turn into positive divergences. Here is another chart that has potential positive divergence written all over it, which is the S&P500's McClellan oscillator. As you can see here, we have not yet turned up as we would have done here, for example, as you can see here in January and here in June. So we do need to see a turn up in the McClellan oscillator to start to suggest that we have a bounce and then lower prices. That happened here as well, bounce, lower prices, bounce, lower prices. So I like it. Don't necessarily have to make a new low, but I think we will for that 4-5 setup as it is on the charts. So that's all I have for today. Very short, very sweet, very simple, in my humble opinion. So we're tracking this ABC versus 1, 2, 3, 4, 5. Similar downside targets, 26, 27,000 here, 26, 27,000. Fits with the larger, bigger picture for this A, the B, and the C. Okay, so get ready for a big bounce. We're just not there yet. We need to wrap up, in my humble opinion, 5 of 3, then 4, then 5 for all these indexes. Same for the NASDAQ100. Same for the semiconductors to align everything. Same here for the S&P500. Either the 1, 2, 3, 4, 5 lower or the ABC lower. It all fits with the narrative that we will then bottom somewhere around 3,400 plus or minus 100. Let's round it up for a larger A wave, the B wave, and the C wave. Here we get wave A, wave B, as I show you here, back to here, and then a wave C. Okay, so that bigger picture path remains the same. No surprises whatsoever. Thank you so much for listening. Take care, trade safe. See you all next week.